Morning all. How are we all doing? Busy day today. Got lots of lots of news coming today, and we've obviously had lots of news already this morning. As you can see, the ADR dash is lit up like a Christmas tree. New Zealand dollar. So we'll start with a quick rundown of news. Excuse me. I've got a short running at the moment on the DAX. We had a nice DAX gap fill opportunity this morning up here. As soon as it pushed down, I entered initial position, and then we had a little pullback, got into a second position, and it's just gone. So very nice one this morning. I haven't filled it yet, so it's not in the bag, but yeah, nice looking little gap fill potentially playing out. Morning, Andy, Aaron, Peter. So news-wise, today is a biggie. Let me just refresh this. Oh yeah, that's right. It's Wednesday. So this morning we had the New Zealand rates. They put it up by 0.25%. Morning to you, Armand. So that was unexpected. A little bit more than expected on the New Zealand. So yeah, bit of a surprise there. So hopefully that might be setting the precedent for things to come. Obviously, we've got lots of rate announcements coming up regularly. Morning, Franco. So we might see some shocks starting to come through. So New Zealand's obviously set the way. Consumer price index for the... I never understand why that is positive. It's not positive. It was higher than expected as well. So things going through the roof. And then this afternoon, we've got PPI for the US dollar. We've got the CAD rate. So again, we might have a little bit of a shock there. And then we've got the CAD press conference. So busy today. We've got news pre-market open, half an hour after market open, and an hour and a half after market open. So lots and lots to watch out for. And then obviously tomorrow we've got the euro rate, we've got Aussie unemployment, and then we've got retail sales, and the ECB press conference. So yeah, it's busy. So Swiss yen I got stopped out of this morning. This thing never got into profit. We pushed up, and I got that position on. Never got into profit on it. Oh, I did get into profit on it. Not by enough though. Obviously, I was looking for a fade on this, and it's just basically accumulated and pushed this morning. But on the plus side, I've got into the US dollar yen this morning. But on the negative side, it's flown. So I'm monitoring this at the moment. So the US dollar yen, we're at that level that we were looking at yesterday, which is the high from 2015. So we literally slammed through it. We haven't stopped as we've gone through that level. So not quite sure what is going to happen on this one, but obviously you can see the yen flying. We are getting to the point on this thing where it's going to start to have a pullback at some point. Yeah, we're getting to pullback areas. So market's opening in 5 minutes. So I'm into an initial position on this now, up at this level, looking for some kind of reaction up here today. I'm watching this to see how far it goes. I'm willing to take a bit of a risk on this one and put a second position on if we get up to 125, 150 ADR level. If we exceed that, which is kind of around about an ADR above this level, then I'll think about getting out of the position. With higher time frames, this is not going to be a liquidity run, really. I mean, it's a bit of a silly thing to say, really, but you don't do liquidity runs from 2015. Those positions are gone. But what we tend to find is people will have limit orders, and institutions will have limit orders ready for a reaction at that level, and they will have stops on those limit orders that are triggered. And they'll be fairly wide, obviously, because we're expecting, it's not going to go bang off to the pip. Sometimes it does, but it's going to come to this level and decide in a price discovery phase whether or not it wants to be higher or whether or not it wants to be lower than that level. So you'll have stops sitting at various levels there. So quite often we see these deep stop hunts with half an ADR to an ADR. So I'm giving it a good ADR or so to decide which way it wants to go, and I'll enter an extra position if necessary up there with a view to getting that moving. So it's a little bit more risk than I would normally take on it, but I think it's worth it on this particular position. So at the moment it's obviously pushing hard, so we will see. And I got into a pound US dollar short this morning as well, which is playing out very nicely on that news. So we had the CPI came out, it spiked up, so I shorted it as soon as it started to pull back. So I'm in a short on the pound US dollar. That's not good. I hate it when they do that. Consumer price index at 7% is not green. It's come out as a different number, but it's not a good situation to be in, is it? So anyway, they give it a green, but it's not good for the pound, so I'm shorting the pound. Targets on it I haven't really set yet. Yes, I have. I've just gone for ADR. The only reason I've gone for ADR but is just there's not really a level where we're obviously falling out of the back end of the pound US dollar at the moment. So where it's going to stop, nobody knows. But I'm going for an ADR on it. This is basically a 2-to-1 on the Swiss yen. So it's going to pay for the Swiss yen and obviously bank a nice percentage on top of it. So we'll see what happens on that one. But short, I've got a stop up there, but I don't think we're going to get near our stop. So I should be watching that. New Zealand dollars quickly before the market opens. I'm just going to. I can't do this. I'm going to take one of these off and just protect the other one, just in case. And hey, let's go for the lows. New Zealand dollar. Obviously, we had the rate announcement on the New Zealand dollar. Interesting symmetrical triangle hit there. Look. Yeah. So remember the symmetrical triangle? We broke out to the downside. We're off. So New Zealand dollar has hit ADR across the board. Obviously, the rates have gone up. Again, this is a prime example. Yeah. Green, not good for the pound. Green, not good for the New Zealand dollar. Forget the colour on this. What we're looking for is it as expected or not? That's the important factor. The colour of this has got nothing to do with it. Whether they think it's good or bad that the CPI is going up and everybody's getting poor is irrelevant. It's not good for the currency. So New Zealand dollar obviously is coming down hard. Do not get in the way of this today. This is an unexpected rate increase. So we could be seeing a substantial drop in the New Zealand dollar today. So I wouldn't want to be getting in the front of this with ADRs. So, you know, these ADRs that are all New Zealand dollar based, which is all of them basically, ignore today. You're standing in front of this moving freight train if you're trying to get on the opposite side of that. So, Franco, I thought yesterday was going to be a blowout. Made gains 2.3%. Need to have more faith in you. Yes, you do. Good job. Gap fill is done. Just going to protect the profit on that. I've already banked 0.5% on it. That is around about 0.4% in that's 1%. So if we get down to here, that's 1.5% banked on that gap fill. If we get there, I'm 0.8 banked on the gap fill. So we'll watch that. Indices yesterday. So the DAX, we got a very weird doji yesterday. So we had the big push and then the big drop, and then we came straight back to midline on that. Bit of an odd move because obviously we got the gap fill. You can see the little arrows on there. I played the gap fill back up to there, and then we shot off. It was a very weird price action day yesterday. Very similar across all the markets. Quite a bit of indecision as to which direction they're looking to take it. Just stopped out at that one with a 0.3. Give this a bit of time to bed in now. Just going to switch down to 1 minute charts again. So yeah, no idea direction wise today. When you get these doji candles or sort of spinning tops, it's very difficult to gauge direction because obviously this is an indication of the market indecision. So the market yesterday didn't know what it wanted to do. So at the moment, it is an indecision phase. Quite often following a doji, we will get, or a spinning top, we will get a push back in the opposite direction to the previous candle, which is what we call a 3-bar reversal. So we are pushing up at the moment on the US indices. Obviously, this isn't the US session, but we are having a slight push on these. The DAX is obviously doing the opposite, but the DAX obviously had a gap fill. So we got a little orphan down there, which obviously it's just done. So I suspect we're probably going to push long off of this now. But quite how far we'll go is difficult to tell because we've come down a hell of a long way already today. So tricky. And we've got so much news. 7:15, we've got Kuroda talking as well. That's already happened. Did anything happen to the yen? Off the back of that. And obviously we had that spike on the yen. Yeah, that was him speaking, wasn't it? So that was the spike, right? Okay. So yeah, I'm looking potentially for a long opportunity on this today. Not looking to play it too high, but gap fill's done. So I think it's a case of really just getting a pullback on this, and then market will decide where it wants to go. But obviously, overall, we are still short. Still looking for shorts long term on this, and all the other indices all coming down very nicely off of those highs. But as I said, for the last few days, this is potentially just a pullback long. But obviously, longer term, we're in a bear market, so hard, very hard after a candle like that to sort of gather a bias. So just got to kind of play price action today, really. We'll see where we go. We'll have a look at all the FX pairs as well in a minute. But obviously ADRs today, we can just ignore all these New Zealands. These are all steam trains at the minute. Dangerous to get in front of these, I think, at the moment, but we'll see. Pound US dollar still pushing down nicely. Okay, so there's our 5-minute opening ranges in. So I'm looking for a break of the high on the opening range today. Opening range is 600. I haven't turned the crickets on. Turn the crickets on. Selling action coming in. All the indices selling off. DAX, the S&P, the Nasdaq, the Dow, all made new lows. Well, the DAX hasn't yet, but all the others made new lows. So I was just reading news, just to see if there's anything interesting in the news overnight, but there's not really. Very, very light news coming out of Ukraine at the moment as to what is actually going on. Obviously, Putin's pulled his troops back, but looks to be massing troops for a second push. So it's kind of the calm before the storm, I think, at the moment. But there was rumours of chemical weapons being used, which is obviously not good because that annoys NATO and don't really want to get involved. But that's the next thing I think is going to happen. And then from there we could see some big drops in the markets off the back of NATO getting involved if that actually happens. But morning, Stevie. Bit of a subdued open this morning. Obviously, we put in all this movement ahead of the open, so it's a little bit lethargic this morning, which isn't a bad thing. But waiting to see where we're going from here. Looks bearish at the minute. So could well have a down day today, but we've put in good half of a day's movement already. So yeah. Okay, going short one. All the other indices are coming down really hard this morning. So I'm assuming we're just going to follow suit on the DAX as well. So be looking for pullback entries as well. He's focusing the attacks on the south instead of trying to take Ukraine in on three sides. Yeah, I think he's going in sort of south and east, isn't he? By the looks of things. And a lot of the Ukrainians seem to be wanting to go back. So all the ones that are left are queuing up in Poland at the moment to get back into the country. I'm assuming it's not the people that live in the east because you wouldn't want to be there. But if I was them, I would be staying out of the country until he's gone. But when's that going to happen? Swiss yen still pushing up. Yeah, just made a new high. US dollar yen just made new high as well. Obviously, there's nowhere to put a level on this US dollar yen. So, where was the previous high before that one? So we got that level there. Which is, yeah, that's probably about 150, isn't it? 125. So I'm going to stick a second entry at 125, a limit order up there. Looking to get in with the second position if we hit 125 ADR. And then I will evaluate at 150, 175. See what we're doing. Going another short on the DAX. Good rejection. Diamond, not wait for a reversal alert. No, not on that. This is a swing position basically, and I'm playing basically the fact that they will pull back after taking the liquidity of all these limit orders, which will be somewhere up here. But there's a chance that it could fly up to there. You won't get a reversal alert until down here. I'd rather get in there and average in. But if you want to wait for a reversal alert, that's fine. Yeah, I mean, wait. That's the safest thing to do. But as I said, this is an aggressive position and very speculative. This is this is nothing to do with market structure at all. I'm literally playing a trade on the fact that we are at a high from 8 years ago that we haven't reached for 8 years, and I'm banking on the fact that the market is going to have a load of limit orders set up here to dump it. So there's quite possible that we get some news this afternoon and this thing goes like that. By the time you've got the market reversal alert on that, you've missed the move. So this is a speculative position. It's not a market structure based thing. It's a complete gamble. 50% of trading is gambling. This is a gamble. I'm gambling on the fact that they got limit orders in place, that's all. Hopefully, if they haven't, I'll lose. Be like going into a casino. I just talking to a nice gentleman that tells me that the ADR indicator is programmed wrong. The fact that there's only one way in the world to calculate the average daily range of the last 10 days is irrelevant, obviously, to him. But apparently there's another way to calculate the average daily range, apart from obviously using the average of the last number of days. I don't know. Some people, I just give up. Never mind. It's just maths, mate. New Zealand dollar, US dollar showing some gains already. Other positions rocking. I think I will sit out this heavy news day. Shut it down early. Made my 1.5%. Nice. If you've made 1.5%, yeah. But I would say on a heavy news day like this, there's a lot of opportunities to make money. So you could turn it into a 10% day. You never know. But those New Zealand pairs, they're flying. So wouldn't get. So we've got 200% ADR already on New Zealand CAD, for example. All these others are going to be hitting 200s as well. These may all be, we may well get all of this fade, but this is a bigger fundamental shift. So, we were not expecting that rate change. The market wasn't expecting that rate change. It factored in the previous rate change. So this could well drop. And what we quite often see with these, when you get a fundamental shift like this, is you get the push, accumulation, push, and you get 2 or 3 days where it will just go. There's 175 on New Zealand dollar Swiss. So yeah, I'd hold them. Very, very good chance that they will continue to go. Come on, DAX, what are you up to? Diamond, don't let my wife hear you say it's like gambling. She already thinks I'm basically playing craps. Yes. It is though. It's there's no two ways about it. It's a 50-50 chance. It's well, I say it's not gambling, is it? It's a similar sort of process. Yeah, when you go and play blackjack in a casino, you know the house has the edge against you, and you make calculated decisions which you believe give you an edge when cards come up. So if you get dealt a 15, you stay where you are because the odds of drawing a card that are going to bust you, 7 or higher, are 50%. So you've got a 50% chance of not busting, right? When you take a trade, long or short, you've got a 50% chance of it going in your direction. The edge, the calculation is, will it go far enough in my direction than the stop? So you've got that 50-50 chance there, which is a gamble. And then there is a further gamble as to whether or not it will get far enough to make you money before it gets far enough to not make you money. So you've got this, and this is why it is so difficult to make money, because anyone can hit a button and be right 50% of the time. It's whether or not, like when I went short there, it will get to where I need it to get to before it bounces back in the opposite direction. That's the bit that everybody gets wrong, because what they don't understand is the structure of the market. When you understand the structure of the market and what it's likely to do next based on what it's just done, the odds swing in your favor. That's your edge. Yeah. So if you see the market push down, make a new low, pull up, make a new lower high, and then start to move back in that direction, you know that you're probably going to put in a new lower low. But where that lower low is going to be could be there, could be there, could be there, could be there, could be anywhere. So you look to see where it's likely to bounce from next, and that's likely where it will stop. That gives you the edge. So you're 50-50. If you get the 50-50 right, you've got an edge. It's still gambling in a respect that, you know, you've got no control over this, in the same way that you've got no control over which card is going to come out of that deck next in blackjack. But we don't like to call it gambling because obviously it's very difficult to make money as a professional gambler. Funny that, it's very difficult to make money as a professional trader as well. But anyway, yeah, don't use that term around your family. Get into trouble. Okay, just get stopped out on the NAS. Yeah, Steve, we're playing the game with a slight advantage, so we are not the gambler, but more the casino. And this is the attraction of obviously the smaller time frame trading, is obviously you get the advantage of just got a negative review on the ADR dashboard by that idiot that doesn't understand how to calculate ADR. God. Not very basic indicator, not very useful. Don't understand ADR, so I'll leave a negative review because I didn't make any money out of it. Sorry. I just get this all day long. Grinds on you after a while. We're playing the game with a slight advantage, yeah. Yeah, so it's all about the edge, but the difficulty with the edge is dynamic, and you can't you don't know when the edge is going to play out. So And this is the problem everybody has with taking profit too early, me included. Everybody does it. It's just part of human nature where you have money on the table, you want to take it, but you've got to let that edge play out. And the edge is basically the longer term trade and letting the trade run to where it's meant to go. So anywho. Nice 3-bar reversal going in at those highs. Looks like we're going into a bit of a rotation here. Typical. Reach up, stop me out, go the other way. Now it's kind of coming down hard, look. Okay, going short one more. Might start putting some tighter stops on because I don't need such a massive stop now. It's gambling, but once you learn basic strategies and how to count, how to count is also very helpful. Plus experience, you will win. At least we don't get thrown out of the brokerage house for winning. You'll be surprised. Many brokers will close your account and refuse to let you trade with them because they don't run A books and B books. So your brokers have got 2 books, basically, an A book and a B book. Everybody goes on to, depends which one they do, which way they work it, but typically the A book. Everybody goes into the A book initially and they analyze you as a trader, find out whether you're a profitable trader or a non-profitable trader. The A book, they take the opposite side of your trade. So every time you hit the buy button, they hit the sell button. Because they know that you're going to lose your money. Therefore, they're going to make money by taking the opposite sides of your trades. When they start to lose money on you, i.e. you become profitable, they move you over to the B book. And then they just take your commissions and the spread. Yeah, so that's all they make out of you, rather than making loads of money out of you because you're a losing trader. Some brokers don't do that. Some brokers only do that. If you become a profitable trader, and they stop making money on you, they'll give you some crap about how your country isn't allowed to trade with them or something, blah, 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 and they'll shut your account, kick you out. So you do get kicked out of brokerages. There's many brokerages out there that people are on ban lists for, can't trade with them because they don't like you because they can't make any money out of you. They're a business. It is crazy, but that's not the big ones. The big brokers, the ECNs and the proper brokers that give you raw spreads and market execution, you won't have a problem. It's the smaller brokers. The smaller brokers are out there just to take that money, basically, that you put into that account because they know that 60% of traders will lose 60% of their account within 60 days. So they just want that bit. They don't want the other bit. Usually you find it's the ones with the biggest spreads as well. It's the new traders that get sucked into those brokerages offering things like any brokerage that offers you a deposit bonus, for example. Yeah, they're one of those. Yeah, they're giving you a deposit bonus. If you deposit $400, they'll give you $400 or $200. The reason they're giving you that $200 is because they know that they're going to get the $400 off of you because you can't trade. So, and then obviously if you do then manage to make that $400 and turn it into $1,000, they've lost $600. What they'll do is they'll widen your spreads to make it almost impossible for you to trade. They'll get rid of you one way or the other. they don't want you as a customer. Don't forget they've got control over what you see here. They've got control over spread. They've got control over everything. But the vast majority of brokers are 100% legit, no problems whatsoever. I've used the big, and I've always said, I said this many times. Use the big ones. Use Robo Forex, IC Markets, Pepperstone, Axie. There's loads of big brokers that have been established for a decade, been established for such a long time, 5 years, 10 years. Use them. They're still here. They're still here for a reason. IG. It's the ones that pop up. People keep saying, have you heard of this broker? No. Look at their website. They only launched it last year. And they're based on some micro island that's got a population of 10 people. Run. Not a good broker, are they? This is going to chop me up today, I think. Might need to flip long on this. Diamond, wait. If I lose $100 on a trade, the broker doesn't earn that, do they? Depends if depends which book you're on. Don't the traders on the other side of that take that profit? The broker is just in the middle. Depends. No. It depends which. There's a video. There's a few videos on YouTube about the software that brokerages use. There's different types of software to run different books. So the statistics you see on websites, yeah. So on all websites, you have this statistic, okay. Right. If we're just talking about gambling a minute ago, yeah. If you're a gambler, do you think they're good odds? You've got 74% chance of winning, yeah. So let's say, for example, 74 out of the 100 people that walk through your casino doors, are going to lose every penny they've got because they're making a bad decision. Do you think it's advantageous for you when they place their bet to bet the opposite thing will happen? So let's say they all bet on black. Do you think it'd be good to bet on red? What do you think your odds of winning would be if you did that? 74%. Yeah. So the brokerages run two books, the A and the B. Everybody goes there, yeah, and they do the opposite. If, as a P&L, your customer P&L goes like this, down, can't see it there, goes down all the time, yeah, they stay in the A book because every time they take a trade, they lose money. So if you do the opposite to them, you're going to make money. So when they place a trade long, and put a stop loss there, you place a trade short with a TP there. So you've reversed their trade. 74% of them are going to make you money. The rest are going to make profit because they know what they're doing. So when they have proven that their P&L goes that way, and therefore your P&L as a broker goes that way, you switch them over to this book. You don't take the opposite sides of their trades anymore. You just make money out of their commission. Yeah? That's the business. So it's all over. There's videos on YouTube. There's software. I've posted it in the Telegram group. I'm not quite sure how you'd find it, but I've posted links to the YouTube videos in the Telegram group. There's software that brokers use, which shows them at any moment what the P&L is of every customer, which book they should be placed in. You can run algorithms on every customer's trading profile, i.e. how they get in, how many trades they take, how quickly they're in and out. It profiles every single one of us as a scalper, as a swing trader, as a position trader. It shows you the odds of risk of ruin of that customer over set periods of time. It shows you what would happen if you increase their spread by 0.1, how much more money you would make, how many more trades would fail, how many would pass, therefore what you should do with every person on your books. They know everything about everything you do, and there is a way to manipulate the market to make money out of every single trader. But some of you and us make money consistently, therefore they don't do that first bit, which is take the opposite side of your trade. But they don't know that until you've traded with them. The problem is 60% roughly of people that trade and blow their account don't go back. So they have to replace that 60% every single month. So 100 traders come in and go onto your books, 60 of them will leave next month because they blew their accounts. Yes, you'll take their money, but what the brokerages do is they take 50% of that profit they've made from that customer, they dump it back into marketing on the internet to grab in a new customer, because they've got to completely replace their customer base every month. The churn rate is 60% in a brokerage. Crazy. It's a very difficult business to be in because, you know, this, if you say to any businessman, here's your business model. It's going to make you loads of money. Every penny they've got, you're going to grab off them. The downside is you're going to have to replace 60% of them every year. So you're going to need a hell of a lot of money for marketing. Most businessmen would look at that and go, that's an expensive business, you know? But that's it. That's the way it works. But not all brokerages do it. And that's the important thing. The vast majority of reputable brokers they're interested in spread and the commission, because that's a guaranteed money. Every time you click the button, they make money. That's the business. And every time, you know, you have a swap, they take a loan on your account, and that's what you're paying. That swap is the interest on the loan they're taking on the account that you've deposited. There's so much goes on behind the scenes. It's very complicated. But at the end of the day, they're just banking on everybody losing, which is right the vast majority of the time. And that 73.9 that Axie says is highly manipulated down. Yeah. If you look over a period of 12 months, you'll find that's more like 95 to 98%. They've probably taken that figure over a quarter or the last 6 weeks, or there'll be some kind of manipulation in there to get the best possible figure. And that's best case scenario is 74% of people lose money. That's best case. I know that because I've got a trading room with 5,100 members in there, and there's about 6 or 7 active. I know why the rest of them aren't. Because they're not trading anymore. They've blown it. They can't do it. It's just fact of life, unfortunately. Short one more on the DAX. So we are looking like we are short again now, although this is very, very sideways at the moment. So I'm just going to keep an eye on what happens when we get back down here. I'm on CBHW book. Can't believe he's winning. Yeah. But it will be over a period of time. You know, this they evaluate. I don't know. I mean, I don't know the exact statistics on it, but they will evaluate you over a period of weeks and months, not over days. And everybody has. It's the same with the prop firms. Like I keep saying, everybody can have a lucky couple of weeks, a lucky couple of months. It's the long term goal. Yeah, their goal is deposit 10,000 with us. They know with a very high degree of certainty that 10,000 will be in their pockets, at least a percentage of it, within a certain period of time. They've got all the statistics and the data. It's just like a casino. They know that when people walk into there's 51% of them are going to lose, 49% of them are going to lose, which means that 51% of them are going to lose, which means that they are going to make a profit. That's the casino's edge. Casino's edge is 1%, but you get £1 million worth of gambling done in a night. Thank you very much. Yeah, it doesn't have to be a big edge, does it? Hey, math nerds. Math nerds needs jobs too. Yeah. Their primary focus is to get you to hit this button. Yeah, I've just made them money by hitting that button twice. I haven't actually, because they don't charge me commission at Forex, but they've made money on the spread, but their primary focus is, and this is why they all offer free trading education about indicators. Axie do it as well. All big brokers do it. They've got learn to trade buttons. There you go. Look on Axie, learn to trade. Trading courses, trading education, all this sort of stuff. So they give you all of this, and the goal is to get you to try all of this. So you will try whatever strategies they're giving you. Yeah. So trading strategies. See how many trading strategies they've got on here. I've got to enroll in the course, but there's lot, and this will all be free. But there's loads of strategies in there. So they will get you to try strategy A. Strategy A will be probably a scalping strategy on M5, and they'll get you to hit the button 20 times a day. There's 20 commissions. Didn't work? Okay, let's try strategy B. We'll email you about this one next week. Oh, that looks like a good strategy. We'll hit the button 30 times on that this week. There's your commission. So on and so forth. Yeah, that's their goal. So bear with me 1 second. I've just got to go and let someone in the door. Be back in 1 sec. Sorry about that. Window cleaner's just turned up. I had to open the gate. Right. What was I talking about? Yeah, brokers. So yeah, that's the business model. Like I say, it's a complicated one. There's lots and lots of bits to it, but at the end of the day, they are a business. Their business is making money out of people who want to learn to make money. So that's how they do it. I've got FX running, haven't I? So yeah, there you go. So every time I hit the button on an FX pair, I know they do charge me commission on the DAX, yeah. So that's their job. Get me to hit this button, because every time I hit the button, I'm making money. The more I hit the button every day, high frequency scalpers, they love EAs. They love EAs. Any high frequency EA, brilliant, because what they're doing is they're just making loads of money every time. And obviously the swaps, if you're holding overnight as well. But they are a necessary evil. There's nothing you can do. You can't access the market if you don't have a broker. This is really choppy today. Let's see how the others are getting on. Yeah, very similar. There's not really any movement on any indice today. We're kind of in a bit of a holding pattern at the moment. We've got gaps to fill as well. To the downside, so I would say at some point today we're going to get a drop. Quite when though? Difficult. Yeah, Fox brokers teaching the chickens how to protect the hen house. Yeah, exactly. But this is the problem with education in the Forex industry is all education that you pay for online is a strategy that works for a person, and that person's psychology is going to be different to the person sitting next to them. So the way that they see the market, so we're all looking at this same chart here, yeah. Half the people will be going, this is bullish. Half the people will be going, this is bearish. The brokers couldn't give a monkey's which way it goes. Doesn't matter, does it? What we are looking for is an educator that will tell us which way the market's going to go. There is no one in the world, not even the largest brokerage in the world or the largest bank in the world, sitting there about to dump $10 million into this market. It cannot tell you which way the market is going to go. It can tell you when it dumps that $10 million, it will go in one direction. But is it going to go that way next, Candle? Who knows? They don't know. They don't know. When Barclays dump 50k short now, who's to say that HSBC are not sitting there waiting to dump 100k long as soon as they hit that button? Yeah, so they were dumping the button going, it's going to go short. HSBC jump in and go, no, it's not. Barclays take a loss. Their algorithm does. It's not a man, it's an algorithm. But, there's no education course out there that can tell you one way or the other which way things are going to go. You have to basically take an educated risk based on stuff that has played out in the past that has a slightly good percentage of potentially working. Combine that with the fact that you just timed it right when the algorithm decided to dump its orders. That's the luck part. Without the luck part, you'll find it very difficult to make money, which is why you've got to be in the market all the time, because you don't know when the luck part is going to play out. When's Putin next going to speak? You need to be in the market when he is, because that's when you're going to make money. There's so much that goes into it. Any strategy that works well will be unhinged because HSBC received a phone call from Microsoft who said, within the next 24 hours, we need to do this transaction. Your analysis has just gone out the window. You've been sitting there, right, all week waiting for this setup on the hourly chart, and you've gone, brilliant. Ring, 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 ring. Can you dump it, please? We've got to send 2.4 billion over to Japan. Oh, okay. Boom. Hang on a minute. That breakout. I've been waiting for that for 8 years. You have no control over what's going to happen. It's day by day, hour by hour, by minute, the market is moving based on what is necessary to be transacted. There is no indicator or technical analysis that's going to give you that. but there are indicators that will give you an inkling, like market structure is incredibly reliable. And the reason it's reliable is because you're seeing the large institutional traders executing their orders in multiple parts. That's what market structure is. We got $1 billion to go long with. Let's break it down into $100 million orders and dump it. Wait for it. Next order. 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 Order complete. Market structure. So all you're seeing is the banks executing orders and the brokers taking their commission along the way. And then us poor little chickens have got to try and eat the scraps before we get killed. I have to watch that Chicken Run movie again now. It's reminded me of that. Just have a quick look. I haven't looked at the FX market yet today. We will have a look at that in a minute. Just wanted to see what's happening with my pound US dollar short. Just about to get stopped out of that second position. This is whippy today. I'm still short bias on this, I think, at the moment, based on where we are. So I'm still looking for short opportunities, but at the moment we are just doing that for this session by the looks of things. We haven't got an hour and a half into the session yet, which is when I would expect to see the high or the low put in, but at the moment we're looking like that being our range, aren't we? So sell the highs and buy the lows at the minute until we get a breakout that actually holds in one direction or the other. Let's leave that alone for a sec. Right, so looking at the FX market, obviously New Zealand dollars have all gone nuts. Coming off a 200 ADR at the moment, starting to stall at the moment by the looks of things. So London, we've got some potential moves coming in the opposite direction. Look at that candle and look at that candle. So just be a bit careful getting in the way of these at the minute. So everything you got against the New Zealand dollar is obviously screaming off in one direction or the other. Where's that headed? That's obviously a line from another. Oh no, it's that high there. Sorry. Okay, so Aussie New Zealand, we are just approaching March highs. So you may get some kind of reaction up there. So there may be an opportunity Aussie New Zealand. Again, wait for a reversal alert, just to show that there's some signs of opposite pressure. Quite widespread on that, but that might be a nice opportunity Aussie New Zealand for a short up there, just because we've got confluence. But again, you're getting in the way of something that is moving at a rate of knots, so just be a bit careful with these ADRs today. Franco, great new invention. Books, they help me greatly, but discernment, discernment, that's a long word. Discernment is difficult to develop. Demo gives you that gift. Yeah. Backtesting constantly is a very, very important thing to do. But backtesting, I had somebody's contacted me in Telegram actually today about the price action toolkit, and he's identified that after a strong close candle, if there is an IRB following a strong close candle, that has an 80% success rate over the last 2 weeks on the Nikkei. Backtesting is great for giving you that confidence in a pattern setup, and that is a technical pattern, which is an algorithmic pattern. So there's high probability that might well work, but backtesting over 2 weeks is not a long enough period to give you any consistent results. You need to backtest it over a year or so and see if the edge is still there over a year, because you've got much more chance of those outlying events of news being released around about the time that these patterns emerge, etc., being triggered. So backtesting is very important to give you that edge, but it's got to be done over a long time. The amount of systems and strategies I have built and back tested over the years, and I've made millions over a 6-month period. You run it over 3 years, boom, makes nothing. Because when you're back testing, you are curve fitting whatever strategy you're trading into that period. And that's what people don't understand about back testing, is that you can identify a pattern that works over a short period of time over and over again that makes a fortune. But that pattern is only appearing over a short period of time, and over a long period of time, it will fail most of the time. So backtesting, the most advantageous thing about backtesting for me was the process of eliminating loss. So if you have a strategy that you can get, say, I'm just going off tangent again, I will look at the FX pairs in a minute, a 50% strike rate on a strategy over a period of sort of 3 years, yeah? If you can find one of those that doesn't make money, okay, so you want a strategy that has a decent strike rate but makes a loss. This is the best way to backtest. Find that, yeah, and then look at a way to eliminate a percentage of that loss. By eliminating a percentage of that loss, it will increase your strike rate, okay, and immediately turn that loss into a profit. So let's say, for example, you chose a simple candlestick pattern like I don't know, a strong close candle or a 3-bar reversal. Yeah. So let's say that 3-bar reversal. If they work 50% of the time on the 4-hour chart, for example, yeah, with a 1-to-1 risk reward, yeah, you're not going to make money. You're going to break even. If when you introduced the RSI and you said, I'm only going to take those if RSI is above 50, if that increases the strike rate from 50% to 55% with a 1-to-1 risk reward ratio, you're making profit. So the best thing for backtesting, in my experience, is adding indicators into your backtest to see if they reduce your loss. You don't want to make the strike rate particularly better, or you don't want to find the ones that give you more profit on a trade. You want to find what eliminates loss, because by eliminating loss, you're automatically going to make more profit. It's going about it in the opposite way. Risk reward for me is kind of a little bit of a fallacy, and the fact that everybody concentrates on finding that 1 to 2 risk reward. And yes, if you can do that, that's absolutely brilliant. But if you can find a strategy with a 1-to-1 risk reward that has a strike rate like that, that is your holy grail. You've already got it. Take that and just action it. But don't action it with 0.1, action it with 1.0, because you know you've got 50%, 55% strike rate. Put big lot sizing on an achievable target. Yeah. So go from there to there with a 1-to-1 risk reward, but do it with 5 contracts or 5 lots. Yeah. And do it 3 times a day. That's all you need to do. And then stop. Everybody's looking for the high strike rate. Everybody wants to be right 75% of the time. It's not about being right. It's about being profitable. Being profitable is just about getting money out of the market when the market allows you. If the market's only going to move this far today, we need to find a way to extract money from the market today in this tight range. Your EA that has a 50% strike rate in a trending market is going to just die, isn't it? Got to be able to adapt different strategies for different market conditions as well. You know. Anyway, I'm off on a tangent, so I'll shut up now. Right, so ADRs, yeah, ignore those today. We've got nothing on the RSIs again. These 1-hour RSIs have been quiet all week. We've had really sideways movement on a lot of stuff this week. We haven't got many extensions. The extensions we have had have worked pretty well. But they've only been very, very slight. We've kind of been up into the 75 range, no higher really this week much. So bit quiet on that respect. The 4 hours, we were very, very extended on all of this stuff. There was lots lit up yesterday, which has all started to play out a little bit, but we're also now pushing back up again with these as well. So obviously this is where I took the Swiss yen short. We have pushed basically back up again, stopped me out, but the RSI has obviously dropped. So we've got nice divergence here, as you can see on the 5-minute chart. But looking at the 4 hour, we are ticking back up again. So we're kind of just going into this sort of movement, which is what we had previously up there. So although these are extended, they are still pushing higher. So again, always going to be opportunities when the RSI is extended to get these profit takes, but the profit takes, as you can see at the moment on these, are very, very slight, very, very small. So you need to be in and out really quick, which means you need to be trading on low time frames to get in faster. But all we've got at the moment is the Swiss yen and the US dollar yen, which is the one I've just got into. And again, that's the other reason I'm taking this, is the RSI extension and the fact that we just moved so far. I mean, it's just, this thing's coming down at some point. Again, history. Can't really see it on there because it doesn't go back far enough. But, when you get these massive squeezes like this, there's one. Yeah, massive squeeze. Yeah, we will be pulling back to that 72 moving average at some point. Squeeze, pull back, squeeze, pull back, squeeze, pull back. Yeah, this is a big squeeze. This is more like more normal market structure, but it will happen. Yeah, COVID. Oops. So yeah, it will happen at some point. So we are going to pull back hard. Even if we just pull back to the 24, there's a massive profit taking opportunity there. But likelihood is, obviously, by the time we get down to here, the 72 will have caught up anyway. So it's going to happen at some point soon. We've seen the start of this happening. We are seeing signs of strength starting to come through. But, just be prepared to get stopped out. And this is why I'm not position trading at the minute, because with what's going on with the war and what's going on with the economy at the moment, there's no real way of telling when these squeezes are going to end. They are going to end at some point, and I'd like to be on them when they do. But at the moment, I'm choosing the US dollar yen as my vehicle instead of the Swiss yen. But you could choose either or. Whichever yen pair you're trading, likelihood is it's going to come down. Euro yen is not extended at the minute, which is why I'm not looking at that, because we're just going into an accumulation on this one at the minute for the last 3 weeks, 2.5 weeks. So I'm looking at the pairs which are extended as the best opportunities, because they're going to come down probably harder. So yes, take tools given and create custom tools that works for you. Yeah, exactly. That's what you've got to do. Standard indicators work absolutely fine. There's nothing wrong with. I mean, I'm using one of the biggest standard indicators out of the box as my main condition indicator. Yeah, there's nothing exciting or complicated about this. The RSI's been around for 30 odd years. It's an old stock trading tool, but it shows you a condition in the market which is likely to form a mean reversion. And I needed a signal indicator to get me in. So I didn't find a good signal indicator, so I created one, because I wanted something that showed me market structure breaks. So that's why I created this indicator. I tried using price action, and I found price action gave me too many false signals. Price action candlestick patterns, like the 3-bar reversal, gave me too many false signals. So I wanted something that gave me a better confirmation. M pattern reversals are market structure reversal patterns. So I created an indicator to tell me when they were happening. All I did was combine it with that. Now, that didn't make me more money. What it did was it made me lose less money. So where I was taking 3-bar reversals and making a 30% strike rate, what it did by entering this extra confirmation in was it made me lose less. By losing less, my strike rate increased. I didn't change the amount of money I was targeting. all I did was get rid of some of the losers that I was finding with these. It's just eliminating losses. That is the best way. If you want to find out more about that, there's the guy called on YouTube. Oh, I've forgotten his name. VP. What's his name? Anybody in here know who VP is? God, I've forgotten his name. But he's got a really good free YouTube channel about how to create strategies. Very, very, very similar methodology to what I use. I've forgotten his name. It's going to bug me. Anyway, I'll see if I can remember it by the end of the session. On your toolkit, does it have a close 50% button? No. Oh, God, it's pushing up again. Somebody asked me about this the other day, about a no-nonsense Forex. Thank you, D. Yeah, no-nonsense Forex. Go Google him. Brilliant. He's very, very, very much the same as me. I totally agree with the strategy of putting multiple indicators together for confluence. There's different parts to strategies that need to be there, and he's very much doing the same thing. VP, Vladimir Putin, yeah, definitely not him. Yeah, somebody asked me about this the other day as well, about having a 50% close or a partial close button. That isn't really what this is for. You know as well as I do, you've seen me do it in here many times, if you move to break even, you will get stopped out of break even. If you take a partial close, you will get stopped out of break even. The best thing to do is to enter multiple positions and close the most profitable. This basically does the same thing, this button. Yeah, it closes your most profitable positions. So don't get into one position. Yeah, take a trade. When your trade is working out, take another trade. And then close the most profitable. That is basically the same as taking 50% off, isn't it? Take two positions, close the most profitable one, then move the one left to break even if you want to. So it doesn't need a partial close button. What it needs you to do is change the way you trade. And if you want to have it force you to change the way you trade, turn scaling in on, and it will get you into additional positions. Automatically, it will force you to do that. So when you hit the sell button, after you're 100 points in profit, it will get you into a second position. It will force you to add to your winners, which is what you should be doing, and then close out your most profitable. I don't have this on just because I do it manually, but yeah. So that is in effect the same thing. I trade natural gas. Is it useful? Yep. I couldn't cook without it. Sorry, I'm not sure if that was the question. I don't trade natural gas. Is it useful? What do you mean? Are you talking about an indicator? ADR, pound New Zealand, 200%. God, if I'd have held that euro New Zealand yesterday, I'd be crying. Look. I'm glad I got out of it. Although I missed half the move, I'm glad I got out of it because I'll be back at break even today. If you're talking about this indicator, the market reversal alert indicator, yes, it's useful. It works on everything. Everything has market structure. Everything moves. Everything that moves in the markets has market structure. It moves up, it moves down. It moves up, it moves down. That's market structure. Everything that ever goes into a trend ever has market structure. Everything that sits in a range has market structure. All market structure is the definition of price moving and bouncing between 2 points, whether it be at an angle or flat. We call that a range, we call that a trend. It's market structure. This signals when the market structure is shifting to the opposite direction. That's literally all it does. It says, hey, look, this was going up. Now it looks like it's coming back down again. What you do with that information, how you combine it with other indicators, whether you put a stop there and a TP there, or whether you put a stop and a TP there and there, is your choice. This is literally signaling you to a condition in the market. That's all. But everything has structure. Every time frame has structure. Markets are fractal. Doesn't matter which one you look at. There is a structure break there. At the moment, this rectangle is telling you that we are still bearish. When this breaks and colours itself in, it's telling you that the structure has broken to the upside, i.e. we've put in a higher high, and it looks like we may well be going that way. Doesn't mean it's going to. It could do that, obviously, because at the moment it's bearish. But that's all it's telling you. But yes, it works on everything. I'm having a nightmare today. From 0.8 up to minus 0.7. I'll get it back. Stevie, yes, I take multiple trades already, which is the same. I just reduce the initial lot size when entering, then add to it if it works out. Yeah, exactly. That's, if this is why I enter with 0.5%. I'm looking to risk 1 to 1.5% per trade. Yeah, that's my risk when I'm scalping. But what I'm looking to do is to add a position, test to see if I'm right, because this happens to everybody all the time. Yeah, you get into a trade and then immediately the trade goes against you. If you get into a trade with a half risk, what you're going to lose is 0.5%. If you get into a trade with 1% risk, you're going to lose 1%. What's better to do, in my opinion, is to get into a trade when you're scalping, wait for that trade to be confirmed and get in again. Now I've got 1%. My average is there because the market has confirmed for me that my initial analysis was correct. So I took a second position. Here, my initial analysis was incorrect. So I've only got 0.5% on. It wasn't actually, because I had an additional position there which stopped out. But by doing that, if you're right, and when you're right, and you get down to where you want to be, you can close one of those off. That's a better way to get into the market, in my opinion, adding to your winning trades on scalping. And when you're position trading, it's a different thing because we're averaging into a long-term move. When you're scalping, you can't average into a scalp because a scalp could go a day. You could get in at the low of the day, and if you get in an average in at the low of the day, you're stuffed. You can't do that. There's a lot of people that try to do that on scalping, and it just doesn't work. It does work, it works, but again, it'll work for 2 or 3 days, and you'll be like, this is the best thing since sliced bread. I've got 150% return on my account. I'm going to sign up for that prop firm. The next day, you'll scale in, and you'll blow it. And it'll go completely the opposite direction. Which is why we scale in on high time frames, H4. Yes, I'm scaling in here because... and with tiny position sizing, because I'm waiting for them to take their profit on their move. It's a totally different strategy to scalping. So scalping, you add to winners. For me, the best way to trade the markets, the Forex market, is to position trade it and average into moves, average into swings. I'm a swing trader, basically, here. I'm trading these swings. I just don't know when the entry is going to be. Don't know where the swing is going to start. So if I think it's going to start there, I'll get in. If I'm wrong, I'll get in again. Now I'm in there. If I'm wrong, I'll get in again. Now I'm in there. If I'm wrong, I'll get in again there. Now I'm somewhere up there. When the swing happens, I'm out. You can't time the market. But your directional bias, like Euro New Zealand, is obvious here. It's down. When the next swing will start, I assumed would be there, and I was right in that time. If I was wrong, I would have thought maybe here or here. So I would have got in there and there. By the time I'd got in there, this thing would be up there, and they'd be desperate to take profit on their move, and I'd get out there. With with this, if you're trading M1 and M5 on this, for example, if you get in here, let's say you get in here short, see how far this thing could go? you just get totally destroyed. Your account's blown before you've got anywhere. Moving a couple of ADR against you if you're scalping and not getting out is just death. Totally different strategies. You just got, as I say, I've adapted to this for the minute while I'm waiting for Putin to stop being an idiot. That is my political opinion. Obviously not being a politician. Euro US dollar is the other thing that's extended on H4. We are bouncing down here, potentially a double bottom. It's the euro though, so I can't long the euro. I find it very difficult to long the euro. Interesting that my TP from this position trade got hit. We are just bouncing down here at the minute though, but I would say something like that. Next leg down. Don't forget this afternoon we've got massive news on the US dollar. We've got PPI at 130. We've got 30-year bond later as well, and then tomorrow we've got core retail. So any of that comes out ever so slightly positive for the US dollar, the euro US dollar is going to come down. But saying that as well, tomorrow we've got the ECB refinancing rate. If the ECB decide that they're going to change the rate, we could see a massive spike in the euro as well. So again, loads of news. This could go absolutely in either direction. This is kind of a really good example of my point from earlier, the gambling thing. Right now, where we are, as a technical analyst, the market will be going, we are double bottoming and we have a large move to the downside which hasn't had a pullback yet. So the technical analysts will be saying, as I've got exactly drawn on my chart here, we've got a resistance level there, which we have not tested yet. We've pushed down. We haven't profit taken this move. We've hit a double bottom where a load of limit orders have been triggered, and it looks like we're going to start a pullback. Pullback should be somewhere there. So that is the trade plan right now, today. We get into this position. It starts to push up to there. This afternoon, the PPI figures come out, and it does that. Yeah, tomorrow, the European refinancing rate comes out and they go to 0.5% instead of 0. It does that. It doesn't matter how good your technical analysis is. Yeah, the market is driven by fundamentals, by what is actually happening in the economy, in the news, and what is happening in people's pockets. So technical analysis is only 50% of it, which is why you've only ever got a 50% chance of being right. If your 50% chance now of being right is that's absolutely brilliant. But tomorrow and this afternoon, there are events happening which will completely switch this in the opposite direction. We can have something like a 200% ADR move because the news has come out different to expected. It's gambling, isn't it? You are gambling on the news being in your direction. So if you take a long here, you're gambling that the CPI figures will come out and the market will see that as a negative for the US dollar. And then you are gambling that the European refinancing rates will be as expected and the market will assume that the euro should be going higher. That's the gamble. These two things we have no idea about. The technical part, we can analyse till the cows come home. But that's all based on historical information. What's going to happen this afternoon and tomorrow, we know we'll do that at some point. That's the bit that I keep going on about, that everybody needs to understand. We know it's going to go up and down through time. Apart from that, I couldn't tell you whether this is going up and down or sideways in the next 24 hours. No one can. So you take an educated guess by hitting one of those buttons. Take your pick. I've got as much chance of that happening as I have of the opposite. Do I care? No. As long as over the next X number of trades, I have a strike rate of whatever my risk reward tells me I need to be in profit. In this case, probably something about 30%. So if I use that stop and that take profit over the next 10 trades, and I'm right 30% of the time, I'll make money. It's maths, simple maths and gambling, isn't it? You just need tools to activate those gambles for you. Yeah. So if you're using the market reversal alert indicator, for example, this morning, your gamble alert would have gone off. Doesn't matter what you call it. At the end of the day, it's just a signal to say, hit that and hope. Whichever indicator you use, and the one that makes sense to you, which is why I keep saying, try every indicator, try every course. Pick the bits that make logical sense to you and make you hit those buttons with the most confidence, because that's what you need, is confidence to hit the button. That's all you need. And if you don't hit the button, you're not going to make money, because your job is a risk manager. And if you don't manage your risk, you don't take the trades, you can't make the money, can you? You've got to have risk on the table to be able to get the reward. How you hit that button, why you hit that button, is up to you. Just use tools that make logical sense. For me, maths. What on average does price do every day? I need to know this. How does it move? I need to know that. When is it likely to start to move? I need to know that. So this combined with that give me the three main things I look for to be able to hit that. And then I need to see where it's going. And the only thing that can tell me where it's going is where it's been in the past, because we know that price has a memory. And when it hits levels it's liked before, quite often it stops there. So I'm going to get out before it gets to that. And if it goes down there, I know I'm wrong on this bounce and I'll get out. It's really, really simple, isn't it? You just got to have a reason to hit the button. And just keep doing it over and over again. And eventually the money will come into your account. If you stop hopping from strategy to strategy, which we find very, very difficult to do as well, don't we? Right, this DAX isn't going anywhere at the minute. So we are stuck at the moment in this range. We've popped our head out to the highs. So we have put in a new high, and we are putting in higher lows at the moment, but not convincingly. We haven't got any momentum whatsoever. This is where we opened this morning. So we've done a lot of movement at the open to get this gap fill in place. So at the moment, this is looking like it wants to gradually grind higher through this session. And obviously this could go on for the next hour, and we may well just get back to where we started today. So candlestick today would look something like that when New York opens. I've got this one short on at the minute. There's no point in me flipping long because I've not really got anywhere to go. So I'm going to look for basically that type of movement today, and assume that they're going to stay in a range. But I'm 0.7% down so far. Pound US dollar, I'm still in profit on. US dollar yen is still accumulating. We have had a reversal alert on it, which is good. So those are the only other two FX ones I've got on. Mace, you make it sound so simple. It is simple. It really is simple. The thing we have problems with as human beings is we cannot accept simple. Why do you think the roulette table has black and red on it? Because some bright spark in the past went, hey, if we only give them two options, we know that 50% of the time we're going to be right. Black and red. Let's make it really simple. I know. Let's allow them to buy or sell the market. But I tell you what we'll do. Also, let's give them 1,000 indicators to make it hideously complex. And that's the problem. When you start trading, you go, oh, Bill Williams stuff looks good. Oh, look, he's got fractals as well. Oh, look, and there's this thing called the Gator. Wow, that looks amazing. Hey, what's this accelerator thing do? I wonder if I can use that to do this. And then what you end up doing is hitting this button over and over and over again, trying every single one of these. I've got a folder which has got over 3,000 indicators in it. Yeah, 3,000. How many times do you think I've pressed the button over the last 15 years? How much money do you think my broker's made? The part of it that isn't simple is your head. Spot on. Exactly. And this is why everybody talks about psychology, and why there are so many books about psychology, and everybody reads Trading in the Zone by Mark Douglas, best psychological book out there. And at the end of it, you come to the conclusion that you have no control. He's written a book. I've got it here. Here it is. You can't see it. I don't know why I'm reaching down for it, because you can't see it, but Trading in the Zone, Mark Douglas, master the market with confidence, discipline and a winning attitude. That's his sales pitch. When you read that book, the underlying part of the book is you have no control. Yeah. On the front of the book it says master the market with confidence, discipline and attitude. Yeah. What the actual book tells you to do is hit the buy and the sell button and get out when you've made some money, because you have no control over which way that thing is going to go. And it's what? How many pages is it? It's only about 200 pages. The actual book itself. 201 pages. It would be unusual to dedicate yourself to hitting 10,000 or more golf balls until the precise combination of movements in your swing was so ingrained in your muscle memory that you no longer had to think about it continuously. And that's what I keep saying about every single day, virtually. Chart time. Sit in front of that chart for 10,000 hours. When you've done that, your brain will be so ingrained seeing this thing do this so much that you will automatically, when this does this, go that's that. Or when you see that pullback, you'll go like that. You don't know which of them is going to work. There's two outcomes to this exact scenario right now. I don't know which one it's going to be. I just need to hold on to one of those. And that, at the end of the day, is what the psychology of trading is all about. Hit the button, sit there and pray. Because there's nothing you can do to move this. You just need something that tells you to do that you have confidence in. So you need to pick Elliott wave. You need to pick market structure. Elliott wave is market structure. You need to pick price action candlesticks. You need to go with bare naked charts. You need to go on the daily time frame or the 5 minute time. You just need to pick something and just do the same thing over and over and over and over and over and over again. Paralysis by analysis. Yeah, exactly. Yeah. If you want to, get this dashboard, the ADR dashboard, and literally every time it hits 175 ADR, open up the chart and hit the button in the opposite direction. Yeah. If you were to do that every single day, probably you would make money. But the problem is, you might only get this happen once a week, once a fortnight. Could you sit there and do nothing for a week? No, you couldn't. That's the problem. We either get itchy trigger fingers and need to just hit it because we aren't in any trades, because we're not making any money when we're not in any trades, or that's the problem. That's actually the biggest problem, isn't it? Or we put so many indicators on our charts that we get mixed signals, and we get the same thing. We get the same signal from the same indicators over and over again. The amount of people I've seen that put a MACD and a stochastic and a Williams oscillator on their chart, they've got 3 oscillators there telling them the same thing. And they're waiting for them to line up. How many signals do you think they get? They're constantly getting signals because the thing's telling you the same thing over and over again. But we like pretty charts. We think that the more of these we have, the more confirmation we're going to get. No, the harder it is for all 3 of these to line up. If this lines up with the stochastic and the Williams are at the same time, what do you think the odds are of it going up or down when that condition and that condition are both met? It's exactly the same as if you were to just hit this button right now without that and that. That's your odds. Every single trade, that is your odds of being right. How far it's going to go is where the psychology comes in. But that's always your odds. And I've proven this in the Telegram group over and over again. I've said to people, pick an instrument, pick a time frame, pick a direction, completely at random. And I've hit the button and I've shown them the P&L at the end of the day, and it's profitable. Because it doesn't matter which button I press. At some point, I will be able to average into that position and get out of it. Because I know the market has to do that to get there. So if you tell me to buy here and it does that, I will buy down there and I will get out there with a profit. Yeah, because I know my odds are 50% at here and here. Therefore, there's a high probability, 50%, that I'm going to be able to get out of the position. And if it comes down to here, I can get in again and wait for that to happen and then get out there. But that's not proper trading, is it, on small time frames? Because everybody always picks M5 whenever I've asked that question in the past. What did I just hit the button on? Look, Euro US dollar, just made some money. There you go. It's not hard, is it? Admittedly, I only hit it with 0.5, but the fact is, you know, it's going to go in your favour or it's not going to go in your favour, isn't it? It's how you manage it when it's there. Analysis by paralysis is an ability to make decisions due to overthinking a problem. Yes. And that is caused by too many indicators. And these are the worst. These are the worst of the bunch. This is the worst of the bunch. And I've even created an indicator that has multiple ones of those together because I was so far down the route of using that at one point. But look at them all, yeah? We know it. We know it's doing that. We can see it. It's coming down. Why don't need this to tell me. I don't need 5 of these, 6 of them. I don't need these all to tell me that price is coming down. I've got a pair of eyeballs. I'm using them. Right? But if you're waiting for every single one of these to get down to a certain level before you get in, you're going to be waiting a long time. And do you think the odds when all of these are down here are above 50% when you hit that button? No, they're not, are they? Might be 55%. Don't know. I'd have to back test all of these, but can I be bothered? No. You know, just pick one. Make a system with 5 moving parts or 4 moving parts, and just hit the button when it tells you to, and then see what happens. And depending on how much money you need to make, how much you've made this week, how much you've made today, whether or not there's news events coming up, whether or not your bias is long or short based on a moving average or something else, then get out when you think it's a good time to get out. But don't try and back test that system, because what you'll do is you'll curve fit it to give you exactly the best results over the last 2 years, which have got absolutely nothing to do with what the Fed fund rate is going to be this week, this month, this year, what's going to happen with the ECB, when Russia is going to invade, when the next plague is going to hit. It's got nothing to do with anything at all. I'm not getting anywhere today with this, so I'm just going to, I think, call it a day there. We have gone completely sideways. So we're an hour and a half into the session. So you can see the session highs now in. This is the 1 minute chart. We haven't gone anywhere at all. We've just put in a higher low again. So we are ever so slightly bullish at the moment, but again, depending on your view, for me this is a bear flag. until we invalidate this high. It's still a bear flag, but this isn't going anywhere, is it? So we need some news to move the market, and that's not coming until 1:30 this afternoon. So I suspect we're going to sit in a consolidation until New York. At 1:30 obviously is PPI, and then market obviously opens after that. So at 2:30. So we'll see what happens. We've got the CAD interest rate as well. So we might find we have a little bit of a sheepish open as well today, because market opens at 2:30, and then half an hour later we've got that market movement. So we'll see. Could be pretty tricky. Swiss yen ADR. So I suspect, US dollar yen I'm looking at. So Swiss yen has pushed up even further. Oh, it's only just got there. We were pretty much there already. So again, nicely extended. Next leg up. These are the levels we were looking at on the Swiss yen. Not going to see them because they're miles back, aren't they? These are the ones from years and years ago, aren't they? Yeah. Sorry, no, this is 2015, isn't it? 2014. 15. Yeah, so these two levels here, you can't see it because it's a bit zoomed out, but that's the absolute high, and that was the secondary high. So that's our next target. So we've broken this high here. And again, exactly the same as with the US dollar yen. We could well just push above that and then collapse out of it. If we push above it, reject it, that's where we're headed. And we should get the next reaction up there. So if you can and you want to, these are good swing trading opportunities to get in now. And if you want to scale in up to there. And then wait for that drop back down to the 72. Obviously, it's got a long way, can come all the way back down to here. Yeah, support resistance. So there's a long drop, basically, is what I'm saying. And we're very, very extended on the daily chart. So we should have a good couple of days or a couple of weeks, really, movement down at some point on all of these yen pairs. But we're waiting for a catalyst to kick this all in. And it could well be US dollar. We could have the US dollar being the catalyst. We could have the euro being the catalyst. Don't forget the money is going to flow to where it's going to make the best return on investment. So if all of a sudden the euro changes their rate to make it more attractive for investors, i.e. something that is going to promote the euro and appreciate it, money will start to flow into the euro, which means it will start to flow out of other currencies, which could well power the yen up at the same time. So there's lots of stuff that can go on fundamentally. Every single news announcement we get has an impact on all currencies, because obviously currencies are being traded with currencies. So you need to be aware of, just because the Aussie dollar and the New Zealand dollar rates are doing X, Y, Z doesn't mean that's not going to have an impact on the US dollar and the yen and all the other currencies out there. As we've seen with the Aussies pushing up, and while the yen is weak, when the yen powers up, the Australian dollar and the New Zealand dollar start to weaken off. 225. There you go. So that's why I was saying don't get in front of this bad boy today. This is a fundamental shift. Yeah, this is exactly what I keep saying about. Yeah. Expected rate announcement, unexpected rate announcement, massive change in fundamentals. The market has been expecting a currency to appreciate or depreciate at a set rate. That set rate has now changed unexpectedly. So we're seeing a big impact on it. Did anybody get short on the New Zealand, by the way? Didn't really have too many opportunities. New Zealand dollar yen, how's that holding up? Yeah, so that's only got 100 because the yen's so weak. But yeah, big moves on these guys. Don't get in the way of these today. I don't think we want to be ADR reversals on these. Right, I'll call it a day there. Anything you need, let me know. I will be in the Telegram group. I'll be back on at 2:20 this afternoon as usual. we'll have a look at the US pairs. I'm keeping this short on. That'll take me up to 1.3 down for the morning if we get up there. Obviously, if we push down, I would expect us to come back down and retest this level down here, so break these lows. So I will probably add on a break of this level, which is going to be... So I'll be looking for a break below there to add another position, and then I'll get out down here. Assuming we're going to be able to get some downward movement. But this is a lovely flag forming at the minute. On M5 it's probably a little bit easier and clearer to see. That's not because of that wick really, but there's your flag. Mace was short New Zealand dollar CAD. Nice one. That's what I mean. You know, these you've seen me when we were position trading more. You know, you've seen me having these days where we have 2-3 days where I bank absolutely nothing. Then I have a windfall 3-5% day. That's what happens. You can't control what the market's going to give you and when the market's going to give it to you. You have to be in the market, and you know there is luck involved in this. When the New Zealand dollar tanks and you happen to be short the New Zealand, awesome. If you set TPs, you're going to get out of TP. If you don't set TPs, you're going to get runners. And those runners are going to make you a decent amount of money. It's hard to keep runners in the market because when you see something exceed where you expect it to go, your psychology then is screaming. That little person in the back of your head is screaming at you, take it, take it, take it. And that's what we do. As long as you're taking it more than you're losing it, that's it. Sounds so simple, but it's not, as we know. Okay, I'll call it a day there. Anything you need, let me know. We're back at 2:20 this afternoon, ahead of the market open. Be aware of 1:30 on the PPI. I've got US dollar yen short, so I will be monitoring what happens to that there, and I will be adding to that position if we get a spike off of that news. So my plan on the US dollar yen is, you can see it in here, I've got the sell limit in, 125 ADR is to add, not with a 0.5, so I'm adding to the position up there, and I will see what happens after that movement off of CPI. That'll give us some kind of indication. It may well just come straight down, don't know, but we are getting to the point on this one where we should start to see some negative movement, but we'll see. And a pound US dollar, obviously I've got this one short as well, so I'm hedged basically. If the US dollar powers up on US dollar yen, I'm going to get into a second position. This is going to tank. So what I'm looking for ideally would be a lovely whipsaw today, so I can get out of this one down here and then the US dollar yen collapses. So I'm basically hedged on the US dollar at the minute. But we'll see what happens. All right, have a good one, everyone. I will see you at 2:20 and hopefully we'll get a bit more out of the market this afternoon. Have a good one.